Good morning. Well, I think always the tracking from outside, I think never got inside into this particular company. Largely because of the fact that I think, yeah, on one side, this company has been doing amazing work in terms of tying up with various joint ventures, which are also imparting technology into them. And on the other side, they taking care of their customers who are all marquee customers. The fantastic amount of combination. I think on one side, the giants of the world, I think, are the partners. On the other side, I think the customers are the partners. So I think this is a good combination. Unfortunately, I think why couldn't invest in this particular kind of business? That due to the fact that I think the margin in this business has always been very small, and that would always give you some kind of I think concern that if you are buying something which is a very fancy valuation, and I think when I say fancy valuation, it is talking about 70 times to 120 times kind of price earning ratio in this kind of businesses. Now, whether I think one wants to buy this for the name of the growth, I don't know. But I feel that I think if it is so expensive, one should buy at a time when market gives an opportunity. In between, market did give opportunity in the last 6 months or 7 months. So otherwise, I think one is not, I think, very comfortable buying something which is very expensive at this level.
Okay, so that's the take on Dixon Tech. But Kunal, I want to come back to you. And there's news flow regarding the auto segment today, wherein we understand from agencies that the Ministry of Heavy Vehicles, they've promoted a new scheme for EVs. Now, yesterday I remember you were particularly bullish on the auto pack. Is the EV theme something that you're bullish on within the pack, or do you believe the traditional stocks are likely to do better?
So I think traditional stocks are likely to do better. So in fact, we would be bullish on M&M, Eicher Motors and Escorts. These were the three stocks which we highlighted specifically because of the fact that these stocks were seeing a renewed bout of momentum. And I think after quite some time, because these stocks they lack that zing as well as correlation with respect to the index movement. So earlier when the indices were moving up higher, these stocks used to trade in their own zone, consolidating in their own respective bands. But over the last few days, we actually saw some divergence coming back, leadership quality coming back into the auto pack, where you saw volumes starting to chase the stock prices, and then the stock prices heading towards breakouts on individual basis. So I think that was one of the first indicator which you look out for. We call this as classical relative strength, which we observe into stocks as well as within sectors. And when that happens, those sectors as well as those stocks, they generally tend to outperform for a prolonged period of time. So that's what I was betting on for the auto pack.
All right, so let's watch out for the auto counters as well. But other than that, today we will have our eyes on Cochin Shipyard as well, as the company has received a new order. But Rudra, just wanted to have a chart check by you, because of late all these defense and ship related companies, they have been doing well. But what exactly are you seeing on the charts? Because the geopolitical tensions seem to be easing a bit. But what exactly are you seeing on the technical front?
Look very strong. It is making that higher top, higher bottom formation, and every dips to levels closer to the 2000 to 2070, I will be a buyer where there is a strong short-term support. So even at current market price, I will be a buyer in Cochin Shipyard. Yes, it can go back to those higher levels of around 2400 to 2500. And if I have to bet on defense as a sector, my top two picks will be definitely BEL and HAL. Both in terms of valuation as well as on chart pattern, I have more comfort in HAL and BEL compared to either Cochin Shipyard or even Masgao Dock. But however, if you ask me specifically on Cochin Shipyard, I will do follow these levels and buy every dips to that 2000 to 2050. And yes, a move towards the 2400, 500 is possible, but still I will prefer an HAL or a BEL over these stocks.
Okay. Is there an easy trade sitting in HPCL and BPCL? I think Kunal spoke about BPCL. It's unusual, right? It is always HP before BP.
Yeah.
This time it is BP before HP.
Yeah.
Yeah, I'm serious. It is, you've always, in a sense, and I'll tell you why. And I'll tell you why that is happening is why, because BPCL has a very HPCL is very India concentrated, and they've followed a good policy. They've done buybacks. They've been very open with their dividend, and their spreads have been remarkably higher, and they in a sense are on a mission to reinvent themselves. So imagine a petrol station. A petrol station has pumps but has a lot of legacy land. That legacy land is something which either has a store or a shop, which is not great return on equity. But that legacy land can be used for other purposes. For example, can you use solar charging machines there? Can you put a solar rooftop there? And these lands are so strategically located, the company-owned lands, that they are impossible to replicate. Imagine the petrol stations. I mean, can you open another petrol station parallel to that? The answer is no. So I think for a lot of OMC companies now, you actually will see a lot of these legacy land now getting monetized for rental purposes. Soon these companies which have been, in a sense, rated and perhaps valued on cash and P multiples, it's a matter of 2-3 years, they will soon be a change in terms of how do you value them, which is if cash flow starts and rental income start, you'll start valuing them on price to book. I think we are in that moment of re-rating because they are cheap. Government is committed to save them. When oil prices went up, when oil prices went down, they got benefits of that. And now there seems to be a resurgence and a renewed vigor that we can really benefit and use that infrastructure. I will not be surprised that from these levels, we could see a linear trend in oil marketing stocks. I think 3-4 years they've done nothing, right?
Yeah, they've done nothing.
Deven bhai?
I think interesting. These companies have always been having high potential, from refining to marketing of various petroleum products to pipeline business to exploration business. Each of these businesses are there in the portfolio for these companies, and I think they are fully integrated with the auto sector as well. I think the fuel demand that they cater to in household segment as well. So from a perspective of looking at the business and I think seeing the longevity, yes, I think we can definitely vouch for it. Challenge out here in this business, all of us have experienced their vulnerability on the one side, the crude oil prices, and the second side, which is a little unfortunate, is government's decision to tamper with the prices every now and then. Though I think they call it autonomous, I think it is less autonomous, as and when I think they want the change the policy. So as a result of which, I think one is not getting a complete confidence of staying in this business, even though they are transforming for better, including in the space of, I think, whatever you have explained just now on the marketing side of the activity, at the same time, I think, providing their infrastructure for even EV charging, etc. So all of those activities are definitely sounding well, except the policy tinkering that they keep on doing with these companies. And that's the reason for which one is not fully confident of putting all money into this kind of businesses.
Okay. Rudramurthy, let's talk about aviation and especially Indigo. Is there a trade in aviation today? Because in Indigo, or for that matter, Asian Paints, historically we've seen crude goes down, these stocks go up.
Nikunj, definitely a buy on Indigo at any price for me. This is a stock to own in your portfolio, and this is the stock which will still outperform. Many a times people ask me, which is the next Indigo, which is the next Bajaj Finance. Answer is simple. The next Indigo is Indigo and the next Bajaj Finance is Bajaj Finance. So for me, Indigo, even at current market price, is a buy. Even if you get a gap up today, in fact, yesterday, in spite of all these global geopolitical tensions, Indigo was positive. Crude was not at current price. Yesterday, crude was still up above $78 to $80 per barrel, but Indigo was going up. That was indicating to me that there is relative strength in the stock and company fundamental. No doubt valuations are a bit expensive, but still better to buy these stocks than buying companies which are not fundamentally strong. So for me, the entire story, to cut it short, buy Indigo at current market price, buy it even 100-200 rupee higher. You might spend more time holding this stock, but still for me, targets of 7,000 is possible in Indigo, which can come in next 1 to 2 years. A definite buy for me at current market price.
Indigo is a definite buy, but Deven, coming to you, fundamentally, out of these entire basket of crude sensitives and crude dependent stocks, what is looking good right now? Would you be placing your money on tires? Would it be paints, chemicals, fertilizers, or would you be sticking to these downstream oil companies?
You keep the price of crude oil at $65 to a barrel. And I'm telling you that I think most of the derivative companies which are using the crude oil derivatives, they are going to be in a significantly large beneficiary position. You mentioned some of those names, and I believe that I think they are the right names to start with. because the fact remains that I think when your input cost remains predictably low, and I'm using the word predictably low, in such situation, I think your business, I think, starts giving you not only the confidence in the margin, but also at the same time further expansion for growth. Fortunately, I think most of the chemical and chemical-oriented businesses, I think, which are using chemicals, I think, as a substance, they are basically talking about growth. And should this ceasefire-related situation, I think, persist for a good, then in such situation, the construction activity would start in those countries where the damage have taken place, the reconstructions have, the destructions have taken place. So, in my viewpoint, I think every single commodity, I think, would probably have relatively better times, and crude oil price remaining low is a very good omen for those commodities.
All right, so let's watch out for those crude derivatives. Those will be interesting place to watch out for, and especially the OMCs, because the price action is also seen to be turning favorable. But let's put the spotlight on the infra space, because government reviews around 1,670 ongoing central sector infrastructure projects to fast track the capex, and projects worth 27.93 lakh crores are being reviewed. My colleague Prakash Priyadarshi joined with more details on this one. Prakash?
Yes, in order to fast track capital expenditure, the government has reviewed several key central sector infrastructure projects, a very significant development coming in. Around 1,670 ongoing projects worth rupees 27.93 lakh crores have been reviewed. 602 out of 1,670 projects are mega projects worth rupees 23 lakh crore. Under construction projects of several ministries such as road transport and highways, power, petroleum, coal, and railways have been given priorities. Along with that, 979 projects of Ministry of Road Transport and Highways, 213 projects of railways, 106 projects of power. When it comes to petroleum sector, 106 projects and 113 coal sector projects under construction and have been monitored by the government. But the government is providing its focus on completion of these under construction projects on time. As per the data provided by MOSPI, rupees 4 lakh crore cost overrun estimated due to slow pace of construction, and therefore MOSPI has asked all the concerned ministries to evaluate the ongoing projects to avoid cost overrun going forward. However, there is significant growth when it comes to key central sector infrastructure projects. As per the data, value of central sector infrastructure project rose to rupees 27.93 lakh crore in April 2025 from rupees 10.69 lakh crore in April 2015.
Okay, Prakash, thanks for taking us through all of those details. Deven, what are you making of the entire infra space? Now, with everything that's been happening geopolitically, we've barely even spoken about infra in the last couple of weeks. But what do you believe is the road ahead for infra, and any subsectors or pockets from this theme that you like at the moment?
Yes, I think extremely bullish about the growth and the prospects going forward as well. I think the road, the airports, the seaports, included railways, and at the same time, I think the power utilities. Each of these areas in which I think the amount of investment which is going in from the government side is basically suggesting that we are making something which is very large going forward. We particularly have been liking the port business. We have been liking the integrated logistic business, wherein all the transportation sectors, I think, they converge, and ultimately, I think, allow the goods and services, I think, to move out in and out from that particular location. So I think we like the logistics services, which is inclusive. At the same time, I think we like, more interestingly, power and power utilities. Believe that I think next 10 years or so is going to be significantly large load for power utilities, given the kind of program that we are executing on the renewable side included. So if the blend of 40% is becoming reality in next 5 to 10 years, as far as I think the power blend is concerned between conventional and the new source of power, in my viewpoint, I think the distribution companies, transmission companies, they are going to be equally beneficiary out of that. And some of the finance companies, they will definitely, power finance companies particularly, they are going to be definitely interested in positions. So yes, I think there is a case to remain bullish about it, and selective opportunities are definitely available in the market at this point of time as well.
Right, let's watch out for those counters as well. But challenges hurdle emerge as India, US near the at an even slower pace. What was earlier anticipated in the last quarter, and this time there's not going to be any one-time gain, so don't expect for that as well. And in some cases where the new wins have happened, there's a part cannibalization of their revenues due to limited budget available. So on all fronts, Deven, we are seeing that the commentary is a bit concerning, and along with that, the Accenture read-through wasn't that positive. What's your take on KPIT as well as the overall IT pack right now?
So I think the mid-tier IT companies, in which engineering R&D companies they play a role, including I think the ones I think we are talking about KPIT. I believe that on the other side, the long-term prospects are not denied. They remain, I think, extremely potential and positive, because given the kind of size of the market or the addressable side of the market to which they are catering to, I think we remain distinctly confident that in next 3 to 5 years, when the situation becomes conducive, these companies are likely to fetch significantly large amount of orders. So that is undoubted at this point of time. However, the major challenge, and as you started narrating it, I think the company talks about it, is I think the near-term future, because the customers are not placing enough orders, even though they are ready to place orders, they are not placing it. And as a result of which, the visibility of execution is not emerging. On the other side, the markets have kept the stocks at price evaluations. So KPIT in particular has corrected from the price, but at the same time, I think it is still a price evaluation on cylinder. If the growth is not there, it would even more it will hurt. So in my viewpoint, I think that's a catch. I would think that I think if the market gives opportunity at lower levels for this kind of nervousness from lack of growth, etc., I would think that would be a buy opportunity, because long-term prospects remain fantastic, and at the same time, one is looking forward to this kind of opportunity in the market when the stock price comes down because of near-term hurdles or the headwinds.
Okay, Deven, great to have your thoughts on IT and everything else we've discussed as well. On that note, we'll let you go. Thanks so much for joining us this morning. Well, let's move on from that, and the BSE Sensex reshuffle has become effective from 23rd June, with Trent and BEL entering the index, replacing Nestle and IndusInd Bank. Let's look at the estimated inflows and outflows that the stocks are expected to receive, and Rabinder is here with all of those details. Rabinder.
Whereas Trent and BEL, both the